If you're under 40, healthy, building wealth, I want to challenge you to one assumption you're probably making right now. You're assuming that if something major happens to your health, insurance and savings will figure it out. As a financial planner, I can tell you that's one of the most expensive assumptions people make, and they usually don't realize it till it's too late. Today, I want to explain why living benefits are one of the most overlooked financial tools for people under 40, and why waiting could permanently change your financial trajectory. Here's the mindset I see all the time. People in their 30s tell me, I'm healthy. I don't have a family history. I'll deal with this later. And I get it because statistically, you feel safe. But financially, the risk isn't death. The real risk is surviving a major health event and having to pay for it. Let me give you a real world scenario. Look at my story. I was healthy, 45 years old, working out. A major health issue cost me several months out of work. High, outrageously high medical bills. We struggled to overcome this, but I was diagnosed with a heart disease. Now, finding coverage is extremely difficult, and don't get the premiums that I could have gotten if I would have started at 30 or in my 30s. You're not gone. I didn't pass, but my income was definitely disrupted. My expenses increased. My savings, they were put under huge pressure, and medical costs. I mean, they don't just rise, they rise faster than inflation year after year. And so this is how people with good incomes and a strong savings, they quietly lose financial ground, not because they didn't invest, but because they didn't protect their liquidity. So, what are living benefits anyway? When most people hear life insurance, they think about death, but it's not death insurance. Let's talk about life insurance. Living benefits can totally flip that script. Living benefits are riders attached to a life insurance policy that allow you to access a portion of the death benefit while you're still alive. If you experience one of these: a critical illness, cancer, heart attack, stroke, a chronic illness that limits daily activities, or a terminal illness. And here's the key difference most people miss: this is cash in hand, not reimbursement, not a claim process tied to specific bills, not permission from an insurance company on how to spend it. That money can be used for everything from experimental to alternative treatments, modifying your home to accommodate that, covering lost income, paying down debt, or simply buying time to recover without destroying your finances. So, as a planner, I can tell you liquidity during a crisis is everything. And living benefits create this liquidity when you need it most. So, why is age 40 your financial cliff edge? Here's where timing matters more than people realize. From a health standpoint, the probability of critical illness increases significantly after your 30s. Talk to anyone over 40. But from an insurance standpoint, something else happens. Underwriting gets tougher. That minor diagnosis, that medication you started taking, that elevated blood pressure you're monitoring, all of it affects eligibility and cost. Every year you wait, premiums go up, coverage options sink, and exclusions become more likely. So, I've seen people wait 5 years and pay double for less coverage, or worse, just get declined altogether. And so that's why I'm calling age 40 a cliff edge. Not because something magically happens on your birthday, but because of the cost of procrastination compounds very, very fast. The game changing impact that this could have on your net worth is huge. Let's talk net worth, not insurance theory. If you don't have living benefits and a health crisis hits, where does the money come from? You're going to sell your investments at the wrong time. You're going to cash out your 401k early. You're going to cash out your IRA early. You're going to pay taxes and huge there. You're going to drain your retirement accounts, trigger taxes. You're going to rack up high interest debts, or you're going to lean heavily on family or GoFundMe. And all of these are going to permanently damage your financial future. You see, living benefits protect your assets. They allow your investments to keep compounding. They prevent that forced liquidation, and they preserve the strategy you worked years to build. So, let me give you a simple case study. Two identical people, same age, same income, same investments. One has living benefits, one doesn't. Both experience the same health event 5 years later. One has recovered and stayed on track financially. The other recovered but is rebuilding from debt, lost opportunity, and emotional stress. That difference isn't luck, it's preparation. So don't wait. What should you do? First, identify your vulnerabilities. What happens if your income pauses for 6 to 12 months? What assets would you be forced to liquidate? Or how would medical costs disrupt your plan? Second, explore your options before your health changes. Living benefits, they're not one size fits all. Structure matters. There's many different options to choose from. And third, talk to an independent financial advisor. Talk to us, who definitely understands protection planning, not just investments. So this isn't about fear, it's about control. Because the best time to secure living benefits isn't after a diagnosis. It's while you're healthy enough to qualify on favorable terms. So let me leave you with this. If you're under 40, this decision can quietly become one of the most powerful moves you make for your future. Contact us, subscribe to the channel for more information, like this video, contact us at powellfinancials.com, and let's get you started on the right path to protecting everything you've worked for.